Good afternoon. You're watching Businessworld Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Tuesday. All right, the main index today finally snapped out of a four-day retreat, and in a big way at that. Local shares rose as much as 1.1% to 6,900, but a last-minute sell-off pared back those gains to 0.6%. The PSEi now at 6,870.41. Recall that yesterday, Royce Aguilar of First Metro said that vaccine developments should provide some level of support for local equities. This, of course, as vaccine doses administered already reached 8 million, with a single day record set last June 15 at 322,000 doses. After that, let's get right to our leaders and laggards here for today's trade. You have GT Cap, our best performer, up 3.1% to 614 apiece. Also increasing by as much is Robinson's Retail, or RHI. That at least is now at 52 pesos and 50 centavos a share. Now, also in the red is BPI, losing as much as 1.4%. SMC also in the negative by 1.1%, on the back of a 30 billion peso bond offer, which is due in 2027. Fixed interest rate is at 3.38% yearly, with an option to reprice on the third year and redemption the fourth or fifth year. San Miguel at 114.20. Again, a bit of a correction there. Sorry, SMC is in the green today, up 1.6%. Now, but after session close, one news came up on restaurant operator Jollibee. It enters a 50-50 joint venture with Yoshinoya to operate and expand the Japanese brand in the Philippines. Now, the JV company will go by the name Yoshinoya Jollibee Foods Incorporated, but will do business still under the name Yoshinoya. Again, Yoshinoya is a bold business restaurant with 2,000 stores worldwide. Before that news, Jollibee already jumped close to 2.1% to 206 pesos and 40 centavos a share. But outside the main index, we've got some heavy gainers as well. Take Santa Lucia, for example. The builder surged as much as 17%, but that has been pared back to 11.7% at close to 3 pesos and 35 centavos a piece. This is its fourth gain in 5 sessions. GMA also closed at its highest since trading back in 2007. It jumped 8.7% to 13 pesos and 80 centavos a share, over expectations that it will maintain its market lead over ABS-CBN. Rachel Cruz of AP Security says ABS-CBN is expected to have a hard time catching up, even if it gets a franchise. Add to that a very attractive dividend yield over good earnings outlook for GMA. Now, lastly, let's have a quick check at our local currency here. The peso touching a 4-month low earlier, but has since pared back those losses. Again, the peso now at 48 pesos and 72 centavos to the greenback. This as May budget deficit slightly narrowed to 200.3 billion pesos in May, compared to 202.1 billion pesos in the same period last year. Revenues rose 69.26% to 256.4 billion pesos, while expenditures also climbed 29.15% to 456.7 billion pesos. Year-to-date budget deficit at 566.2 billion pesos. That's wider than the 562.2 billion peso shortfall in the same period in 2020. The Bureau of Treasury says the growth in expenditure level kept pace with the acceleration in revenue collection. Again, the peso at 48 pesos and 72 centavos to the greenback. Here are other developments we're keeping our eyes on. E-commerce platform GrowSari has raked in over $30 million in funding from global investors. Series A investors include Robinson's Retail and JG Digital Equity Ventures. The company provides a mobile app connecting Sari Sari stores and local mom and pop shops to different grocery store brands and products at distributor prices. GrowSari also provides online shopping and delivery services, as well as microfinancing support and e-loading services for small businesses. As of last year, GrowSari reported a user base of 500,000 stores in over 100 towns in Luzon. They plan to expand to 200 cities and serve over 300,000 stores nationwide. The Energy Department is looking to boost development and use of wind power in the country. The department tells Bloomberg that the World Bank commissioned a study on establishing an offshore wind market in the Philippines. The multilateral also noted over 170 gigawatts of offshore wind potential. Energy Secretary Alfonso Cusi says ramping up the Philippines' offshore wind capacity would allow the country to quickly meet its goal of 35% renewable energy share in the power mix by 2030. The DOE awarded 5 wind energy service contracts with a combined potential capacity of 5 gigawatts. All right, before shares rose today, it's been a steady decline for the index the past 4 days as investors stay cautious over a more hawkish stance from the Fed. But is this really a threat to the Philippines? Let's get insights from RCBC Chief Economist Mike Ricafort. Good afternoon, Mike.
Hi, good afternoon, Jess, and your viewers.
Okay, so you now have, of course, talk over in the US over again, like what I mentioned earlier, a more hawkish stance from the Fed. What could probably be the direct impact of that policy here in the Philippines?
Jess, well, at least if you have to put everything in context, I think the central bankers, especially those in the US, have learned their lessons well. Especially, these are similar tools that they have applied more than 10 years ago during the global financial crisis. And it's like they're trying to manage expectations. At least in their signals, it would be two two hikes of 0.25 each by end 2023. So we're talking about 2.5 years from now. So it's still a question because it's an estimate by the Fed or FOMC officials. So it may be staggered by 25 basis points each by then. There are already some Fed officials that signal that they're already open to hike as early as next year, and also that part of the signals include that the discussions for the tapering of bond purchases when it's already being well, the discussions already started on it, but that doesn't necessarily mean that they'll act right away. It's like conditioning the market, setting expectations, that uh, so that there won't be any shock.
But what's
Unlike
interesting here, Sir Mike, you now have BSP Governor Ben Jokno saying that this is going to be less of a threat for economies like the Philippines compared to other emerging economies, which might see an exodus or an exit of capital outflows. Where do you think is Jokno coming from, and do you subscribe to that?
well, Jess, that's what we really have to take that also in perspective in the sense that when, whenever the Fed adjusts its key policy rates for the Fed funds rate, there's a good correlation that many other central banks, especially those in developed countries, that move in lockstep with the Fed. But we have seen in recent years, though, that has changed quite a bit, especially here in the Philippines. There's always some or leeway on the part of local monetary authorities on whether or not they'll follow whatever the Fed does, especially now with the estimated increase in the Fed funds rate. Because now there are peculiar factors here in the Philippines. If you're to at least try to look at what has been done so far, especially since last year, we have seen a much aggressive monetary easing here in the Philippines. That's 200 basis points. That's in 2020. That's among the most aggressive monetary easing or the cutting of policy rates in among relatively large countries worldwide. And that's even bigger than what the Fed did. And now, if you are to, of course, if things get better on the economy and there's a need to take back some of the monetary easing, therefore there's still that flexibility also.
Mhm.
uh, by not necessarily move in lockstep or in the same pace as the Fed.
Mhm.
Because now, of course, learning from the lessons in the past years and decades, using these tools, especially the monetary easing, the policy accommodation that have been used by the global central banks. So they're trying to fine tune also, uh, because it's a delicate balance in the
But
sense
now,
that
Sir Mike, you have the BSP. They are expected to meet, of course, in a few days' time. This time around, are we expecting them to hold, and for how long?
well, at least for the foreseeable future, at least for the rest of the year, the key policy rate would be unchanged at 2%. Especially now, because there are specific factors that are peculiar to the Philippines. We had this 1.5 months of tighter restrictions. We had a 2 week ECQ followed by the 1 month MECQ since the latter part of March. So that necessitated the need for greater support measures. In this case, there's a greater heavy lifting being done by monetary policy because of the lack of funds for additional stimulus measures. So therefore, because if you have to look at it anyhow, uh, well, any adjustment in the policy rate would not necessarily address the supply side inflationary factors. Like, for instance, the relatively higher pork prices at least 20% year on year in recent months. So if you hike rates, that won't address it. It really, that would be addressed primarily by non-monetary measures, precisely by the temporary reduction in the tariffs on imported pork and increasing the import volumes, the MAB. That's one. So that shows especially now that the recovery is relatively slower because of the lockdowns. There's still need for greater support, any support that the economy could get right now, and
Mhm.
that's by way of at least more accommodative or relatively easy monetary policy,
But
or even
Sir
of the
Mike,
view that
given the
yeah,
developments in the US, do you think that it's high time now for the BSP to at least start drafting a possible exit strategy?
well, that's as a matter of prudence. Yes, Jess. That should always be steps ahead. As a pragmatic measure, though, yeah, just like in any other economic cycle or any other economic conditions. So, but nonetheless, because it would be a function also if there would be some taking back of the monetary easing measures
Mhm.
by way of uh, upwardly adjusting the policy rates. So this could be triggered by any second round inflation effects. For instance, if there would be, say, increase in transport fares or increase in wages, and that may have an impact on the prices of other goods and services, similar to what we have seen in 2018. So those would be the factors or the catalysts that would trigger an adjustment. On top of course, the economic recovery is picking up worldwide, particularly in the U.S. Of course,
Mhm.
that would be spearheaded by any upward adjustments by the U.S.
Now,
But
good thing you mentioned about economic recovery, Sir Mike. Of course, we're close to wrapping up the second quarter. Vaccination somewhat picking up, at least here, and you have more businesses opening. How do you think did we fare in the past 3 months? How is growth shaping up, or how did it shape up at least in the second quarter?
so far, Jess, we are expecting a lot of data. Actually, not just growth data, not just manufacturing or like foreign investments, exports, imports. We All of them are coming from a very low base when the economy was almost at a standstill a year ago in April to May of last year. So expect data to, well, we have seen high double digit, if not even triple digit year-on-year increases. And that partly explains why our inflation is also elevated, precisely because a year ago, oil prices came from record low levels. So, but nonetheless, we're expecting also further pickup, and that would be a function of meaningfully lowering the new COVID cases locally. And that would be correlated also with the increased arrivals and rollouts of vaccines. We have seen that in countries where we have seen massive vaccinations, like in the US and in China and other developed countries. We have seen the cases sharply going down, and as a result, economies reopening further, and we have seen much more robust or stronger economic recovery in terms of the pickup in the various economic data. So that's what we anticipate now. Of course, there's still there's still a tight global supply for vaccines. We have to acknowledge that. There may still be some delays in the arrivals, but nonetheless, it's going there. It's moving towards that direction. It's moving in the
But
right
to
direction.
put it more precisely, at least, are you expecting single or double-digit growth for the second quarter?
Well, just for GDP, because of the low base, we won't be surprised double digit. Say if it reaches at least 10% on a more optimistic scenario. Although that has already been adjusted in view of the lockdowns that we had
Mhm.
in the latter since the latter part of March.
Okay, so at
Although
least
we
a
have
10% growth for the second quarter, coming, of course, from a low base last year. Thank you very much for your insights again. And very nice talking to you, RCBC Chief Economist Mike Ricafort. Thank you, sir.
yeah, thank you so much, Jess, and to your viewers.
And those are the biggest stories this trading day, June 22, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.